Thank you, everyone, for joining the World Copper Value Proposition webinar. I'm Gordon Neal, I'm the CEO. I'm going to go through the presentation, the formal presentation, but before I go through the formal presentation, I want to have an informal just discussion or talk about where we are, where World Copper is, where the markets are, and where we are going, and how I see us moving forward with this. The junior resource space is in the worst condition I've seen it in at least a decade. We are being beaten up rather severely at World Copper, but we're not alone. One of the things that I've been blessed with, or I've been fortunate with, is in my career is having access to and working on world-class assets, which have very high value. And bring good economics to the mining space. So again, with my work at Mag Silver, I had the Juanicipio and the Val de Cañas projects that is currently producing a lot of returns for shareholders. New Pacific Metals with Carangas and Silver Sand deposit is again produced a lot of value for its shareholders and the marketplace. And the Zonia project at World Copper is another one of those assets that I've been fortunate enough to be handling. Now, it's not trading at the correct valuation, and I'm going to show you how we're going to get there, how we're going to actually increase this value, get more market attention so that we can realize some of the value that is inherent in World Copper, in particular Zonia. Can you go to the next slide, please? So I've already made some forward-looking statements, and will continue to make forward-looking statements. So everyone on the line should be cautioned about that. Next slide. So we created a value driver flywheel. So all of these components together as a puzzle is what can really drive value for good assets. And the center, there's seven pieces of the puzzle, or 7 pieces of the flywheel, but the central one is the team that actually drives and coordinates these pieces together so that they work seamlessly together, and we can get some value out of our asset. We start with the right place and the right time. You got to have global demand for the metal, and we do have, obviously, copper is in high demand. I mentioned that the deposits have to be standalone economic deposits, which I've worked on in the past. Zonia is one of those as well. Permitting is important. You have to have, in addition to having state and federal permits for your operation, you also have to have permission from your local community to work. It can be the best deposit in the world, but if you don't have community support, it's worth nothing. And an example of that is the Escobal project in Guatemala. It's owned by Pan American. It is the richest silver mine in the world, but it is producing nothing, and so right now it's valueless. Number 5 is infrastructure. If your infrastructure is nearby, you're lucky. If it isn't, it costs you, and to get that infrastructure in place, and that can severely impact the economics of a project. And we are lucky enough to have all our infrastructure close by. Upside, you need upside. You've got to have some blue sky in here. How do you make it bigger? How can it be more valuable? So we have one project, but we need to make it bigger, and we need to have other projects. The path forward. You can create, my plan is to get this value out of the marketplace for World Copper, but you have to have a plan to sustain that value. It will erode over time if you don't have a solid plan underpinning this to keep it lofted. Next slide, please. So right place, right time is the first section of the value wheel. Arizona is a pro-mining state with 10 operating copper mines, produces 71% of all the U.S. copper. It's ranked 7th in the Fraser Institute mining ranking. It hosts the Resolution mine, which is the world's largest undeveloped copper deposit. It'll be coming a mine line in the next 3 to 4 years, and eventually will be the largest copper operation in the world. Timing in the equities market. Investors are obviously looking for copper development assets where they can make some money fairly quickly, and that's being driven by the global decarbonization targets by the Paris Accord for 2030 and 2050. Copper commodity pricing. BHP expects, the CEO of BHP expects fly-up prices in the medium term. New copper supply takes many years to come to market. The concentrate sulfide operations, where an oxide operation, can take 8 to 12 to 15 years to get permitted and come into the marketplace. We can get Zonia producing copper in 36 months. The resource nationalization is on the rise. China produced all the metals that China produces. It's gold, it's copper, it's lithium, it's lead and it's zinc. Stays in-house. It stays national. It stays in country. The U.S. has made copper a critical metal. It's now getting a critical metal sovereignty strategy. Being part of that with production of copper in Arizona is what we're looking for. And again, we're in the right place at the right time. Next slide. So I'm not going to spend a lot of time on this. We know that there's high demand, but I just wanted to point out that the units that really are going to be driving the demand, and we don't have enough to supply that demand, are the electric vehicles, wind turbines, solar, and EV charging stations. But the biggest user of copper over the next 10 years is going to be the upgrading that's needed in the grids to supply all these units with electricity. The amount of copper that's going to be needed to upgrade China, United States, Britain, major countries is just enormous, and we just don't have enough. Next slide. So on the value proposition side, where are Zonia's project advantages? It's the existing infrastructure. It's on private land, and it's a past producer, which means faster permits. If you look at the bottom long picture there, that is the pit of Zonia. It is pre-stripped. Because it's a past producer, your environmental licenses come fairly quickly because it's already what's called pre-disturbed. The power lines you can see on the top photo there run right across the country, right across the property, and the water you can see in the middle slide there. So those four items alone, attributes alone, make it a stellar project in the copper space. Copper oxide porphyry. Only 15% of copper production comes from oxides. The rest is 85% comes from sulfides. So you get a lower environmental footprint compared to the sulfides. The size of the project that we're talking about it makes it nimble for us to get into production. That reduces execution and permitting risk, and we'll get a faster return. The end product is a copper cathode produced on site. There'll be no smelting, and it's a copper cathode that is sold at more than spot price. You get more than spot prices for cathodes. Now, early revenue potential. I'm going to just talk about the summary here of these. I have another slide on this, but I think this is where the market is really missing the boat on the value equation for world copper. We found two reports that say there's 26 to 55 million pounds of copper that's been stockpiled on our existing leach pads. We could get pre-production revenue from those of between $100 million or $200 million at $4 copper. My capex from my 2018 PEA is like $250 million to build an SX.V plant and all the requisite equipment that goes with it. If you add it on just for inflation to 2024, another $50 million to $300 million. If I have $100 million in cash, the terms that I can get for my build for a $300 million plant and processing plant, an SX.V, are going to be in amazing terms. I won't have to borrow money for years. This metal that sits on these leach pads is not being recognized by the market, and it's my job and our job to get out there and get them to realize it. Now, the caveat here is I have to verify that metal is there. I've talked to metallurgists. They tell me if they laid it down and they didn't process it, it's still there. The only thing that can move that is really the acid that you would use to leach it out. So if it's still there, it is a game changer for us. And again, we need to push forward with this, and it's a really big boon for us. I have to verify it. It's not an expensive program, and I'll go through that on my future slide. So on the other advantages, we have expansion upside. BLM lands could triple the resource. We have three or four times, 3.5 times the land around our private lands, which we already know are mineralized. We just have to drill it and add it to our resource. And we do that through infill drilling to move inferred into indicated. And we will have a step-out drill program in the second half of 2025 to move the BLM lands in the northeast, called Zonia North, into our resource. Next slide, please. So talking about the resource, the measured and indicated resource on Zonia is 75 million short tons at 0.3 copper, containing 450 million pounds of copper, and inferred resources of 122 million tons at 0.24, containing 575 million pounds of copper. We know that this has been updated and is now measured and indicated is now 686 million pounds of copper in the M&I. What that will do, and what that does, is that moves our life of mine from our PEA of 9 to 10 years to 15 to 18 years, and adds obviously more tons of metal to our inventory. This gets the attention of mid-tier producers as we grow. So as we get bigger, as we add more tons and pounds, it makes us a more palatable target for other producers. Next slide. So the value proposition on our processing and mining, we're looking at a solvent extraction electrowinning operation, which will run a conventional open pit mining, standard heap leaching, and TSX.V. There'll be no in situ leaching in this operation. There's no smelting or tailings. It's a cleaner process, lower emissions, and a smaller environmental footprint. We have low water consumption compared to the sulfide flotation concentration operations. Low strip ratio. I showed you in that photo, the photo you saw of the pit, that was actually ore sticking right out of the ground. So the deposit is exposed at the surface. The domestic supply chain, so everything we need to run the operation is within arm's length, essentially. Acid is close by, power, water, and labor are right in our area. We'll be producing a 99.99 pure copper cathode, and it's sold at a premium to the spot price. Next slide. So how do we grow? How do we get bigger? What's the upside? Where's the blue sky? This figure to the right, you can see the black dots in that white area on the graphic there. That the white area is our private land. The rest of the area that surrounds it with the outline, that is our BLM lands. To the northeast, that black polygon area with those white dots in it, which are planned drill holes, has 4 holes in it already. And when we tested those 4 holes, we found elevated moly, copper, and gold with depressed manganese and zinc. And this is a textbook porphyry copper footprint. The area measures 1.5 kilometers by 2 kilometers. It's untested. The rock was exactly the same as the rock quartz monzonite porphyry that we find in our private lands. And we have permit applications filed for 5,000 meter drill program. And we only need to put up a bond, a small bond, to be able to drill on that right away. Next slide. So I told you we'd come back to this pre-development cash flow because it's important. The figure to the right, you can see the green area. That's the pit that was on that bottom photo on one of the other slides. To the left, to the west, you see 3 polygons in red. Those are the heap leach pads, the existing heap leach pads at Zonia. The reports that we found were from McAllister Fuel and Oil, which was the last operator in the late 70s, and NERCO, which was a consulting company which was brought in to look at the operation in 1982. What they both found was that there was 7 million tons of material at 0.4 to 0.6% copper on the leach pads that had not been processed. That means between the 2 reports, you've got somewhere between 26 million pounds and 55 million pounds of copper on those leach pads. If you look at the image to the right, you can see where it says Google left in the bottom left-hand corner. There's a little pond down there. We call that the Southwest Pond. What you would do, that's our area, and it extends below that circle that's just been drawn. But that's where we've decided our new leach pad is going to go. So the plan is, before the end of the year, is to do an 1,100 meter reverse circulation drill program on those 3 pads, send the material to the lab. If it's verified that there's, let's say, 0.5 copper, 35 million pounds of point copper, and picking a central figure, it's 135 million dollars of copper. We would move that copper from the 3 leach pad areas, those red polygons, to the pad on the Southwest Pond. We can rent portable SX.V plants, which are actually built in BC, here where I am, ship them down to Arizona and process that material in a year and a little bit figure. So you could have $100 million in a year before you even got into production. Now, the caveat here is we have to verify that it's there. The second one is that we need to be able to move that forward. We need our permits to do that. We can't move this material and process it without the permits. The permits on private land, we are at about 28 months right now away from our permits. So if we can get that, we could get production from this material in 28 months. We are going to be way ahead of any other copper development company in Arizona in this space. And that needs to be understood. Next slide, please. So how do we move forward with this? How do we get the value? We're looking at a 2-phased approach on the private land and the BLM land. The phase 1 will be de-risking. The resource update, which I just told you, adds another 50% has added another 50% to our resource, to about 100 million tons, 113 million tons in the M&I is out. And then we're going to have the leach pad verification program by the end of this year on the private land. Permitting is in Q1 and Q2 of 2025. Actually, permitting is happening now, but it'll happen right through to 2027. But we'll be focused on making sure we get the right permits that we need next year in 2025. At the end of 2025, we'll have a bankable feasibility study, which we will use. And hopefully, if I've got money from the leach pad verification, then I can go to the bank and say, we're going to build this. It's $300 million. What are our terms? By 2026, which is the following year, we'll be doing engineering studies, mine planning, construction planning, geophysical, geotechnical, metallurgical studies in that period in 2026. We'll receive our permits in 2027 and then move forward and start to build the operation. Simultaneously, we will be on the BLM lands drilling in 2025, Q1 and Q2. We'll have a new MREA, or mineral resource estimate, out as a result of that drilling at the end of 2025, and we'll do met testing. The met testing will be done on site. We'll be using ore from the pit, so we get real time, real data. Instead of sending material to the lab, we will actually be doing it. We'll have a metallurgist, do it on site, so we can get real time and real results and real returns, on our metallurgy recoveries in 2025. In 2027, we will start BLM the permitting. BLM permitting is different than the private land. It takes from 5 to 7 years as opposed to 30 months for private on the BLM lands. But remember, we will be in production by 2028. And if it's a 10-year, 15-year mine life, by 2038, we'll have our BLM permits, and the direction of movement of the pit will move from the southwest corner to the northeast corner. It'll march forward toward that Zonia North that you saw on the previous slide. And so we will basically just be stepping off of the private lands onto the BLM lands and just keep marching the pit forward. Next slide. So the last part of the puzzle is the drive shaft, which is the people. You can have all these value drivers in isolation, but someone's got to put them all together, make sure they work properly, make sure they fit, make sure the timing's right, make sure we can afford them, et cetera, from a capital perspective. I've been doing this for 35 years. I took Mag Silver from 50 to 2.5 billion, took New Pacific from 100 million to 1.2 billion, and I did that on the development side. But we have guys like John Drobe, who actually found Escalones. He's a great geologist, understands porphyry copper extensively. Christophe Napoila worked for KGHM and helped to build the Carlotta SX.V, which is just down the road from us. Stuart Ross was the CEO of Cardero Resources, and it became World Copper. He really knows what the ins and outs and the history of Zonia, which has been really important to us, especially on the permitting side. Derek White is, I'm actually in this company because of Derek. Derek was with me at Mag Silver. He was the ex-CEO of KGHM. He built Carlotta, Frankie, Sierra Gorda, and the Robinson copper mines. So he was a copper mine builder. He's a really serious guy. And he came to me 2 years ago and said, Zonia needs to go into production. It has all the attributes. I could make that thing deliver 70 to 100 million pounds of copper a year for at least 10 years. And now we know that we're expanded our resource and we get to 15 to 18 makes us bigger. But Derek's serious. Joe Phillips has been on a couple of boards with Derek. They've worked together. Joe's built 14 mines in 11 different jurisdictions and has a great copper background. So, you need a team of mine finders, mine builders, and my forte is capital markets and markets, and we'll move this thing forward. The value is not being realized and needs to be realized in World Copper. Next slide. So where's the value gap? There's a huge value gap with our peers in Arizona. In Arizona, Sonora for Faraday Copper and Marimaca. You can see they're all in the PEA. Market capitalizations are across the map. NPV 8 is also across the map, but the price to NAV 8 is what we should be looking at here. We are undervalued 3 times to Arizona, Sonoran, 10 times to Faraday, and 20 times to Marimaca. I mean, if there's an opportunity, and we have the potential of $100 million to $200 million in cash on my leach pads, I've got a better project than all of these guys combined. So we are undervalued. It's a good opportunity to get in here and realize those gains as we move this market forward, because we're not staying at 13 million market cap. I believe that Zonia personally is worth, I would say, $500 to $600 million, and we're trading at 13. So to get it to $500 million is possible, but it's going to take a lot of work, but we'll get it there. Next slide, please. So what are next steps? How do we underpin this? How do we support a rise in valuation? Well, we're going to have to continue with the development of the Zonia project and advance it toward a BFS, because that's what people are expecting, and that's what we've said we're going to do, and that's what's going to give us the revenue down the road that will give us the value. We'll be using traditional marketing programs to re-engage investors, highlighting this value proposition that I've actually laid out here today. I have 3 marketing teams that work with me. I'll be on the phone. It's going to be a one-to-one, one-on-one process of using webinars, phone calls, seminars, conferences, and getting out using interviews on the internet. It's going to be a full court press over the next 60, 90 days to get this thing. I want to get it up to 15, 20, 25 cents over that period of time. And then we might be looking at a financing at that particular time. The leach pad verification drill program is extremely important, because if it's verified, even if the market gives me a discounted value for $100 million of revenue that's on the leach pads. If they gave me half of that valuation, there's $50 million right there that I'm sure the market will say, oh, if that's cash value, then let's give you something for it. I'm not getting anything for it now. New project acquisition. Escalones is impaired. It's our Chilean project. It's a very good project, 426 million tons at 0.36, 1.3 billion, 1.5 billion pounds of copper. But the Chilean government put it in a sanctuary of nature last November, and it's impaired my ability to be able to drill it and move that 1.5 billion tons in pounds of inferred into the indicated category and de-risk it. I need to drill it to get it. It looks like it's going to be fairly difficult to get those permissions, or at least it's going to take a long time. So it's hard to add value to something I can't drill. So the best idea is to look at probably monetizing Escalones over the next few months. We do have some interest. It would give us some non-dilutive capital. I don't want to give it away because, at 1.5 billion pounds at 0.36 at surface, you do need water. Water is the only thing that's missing there, but that's solvable. Again, that's an infrastructure issue. That's what will give us. That's where I'm looking at to do with Escalones. The final item on the slide here and in the webinar is continued contact and transparency. So I'm available. On the next slide, you'll see my phone number and my email address. The buck stops with me. If anybody has any issues, questions, comments, suggestions, call me. I'm available at any time. And so that's really all I have to say today. I wanted to welcome you into the World Copper world and get ready for the next phase, which is to add value to this company with this amazing asset. Thank you very much for your time. Now we'll take questions, and what I've got here is, what I can see here is your board and management considering any upcoming funding rounds? The answer to that is we wouldn't want to do a financing at these levels. We did one in April at 7 cents. It was highly dilutive. I would like to get this to the 15, 20, 25 cent range before doing the next round of financing. The next question is, what is the cash burn? I've got about $1.2 million in the kitty, in the treasury. I'm burning about 150 to 175,000 a month. So it'll take me out probably 7 months, 8 months. So I have time to add value, get the price up, and do a financing. Please discuss short and long-term debt obligations of the company and the ATM and its uses. We had 4 point. When I walked in the door in February, we have $4.4 million in debt. We did a financing and paid back $2.3 million of that to the largest shareholder of the company, and then there was 1.9 remaining. That's currently being pushed into a royalty, so we actually will have no debt. On the ATM, ATM I thought was a good idea, and it is a good idea. The problem is with an ATM, you need a significant amount of liquidity, and you really don't want to use the ATM unless you've got price appreciation. So on the next marketing drive that we'll have over the next 60, 90 days, I'm going to want to, if I wanted to use it, I would only use it as the price was rising and we had a lot of liquidity, a lot of volume in the stock. It doesn't work the other way. And that's why I say if I don't have the liquidity and we're not rising as fast as I would like, we would probably look at doing a traditional financing in the 15, 20, 25 cent range, depending on when that is and my runway on capital. Please comment on the recent selling pressure. Well, we did. We had a financing where a hold came off, 4-month hold came off in two places in April. I think it was 16th and the 26th. I'm a little surprised that people would sell into the marketplace at 6.5 cents when you got 7-cent paper, but there's a half warrant there, and maybe that's it. I am seeing that the volume on the sell side is drying up significantly, so that's a good sign. If I'm going to be bringing new investors into the fold, it would be nice for them to have to buy the share price up rather than getting filled at lower levels. Copper prices have had a major decline since reaching a high earlier this year, with demand for EVs declining and concerns about the Chinese economy. Do you expect copper prices to continue their decline? No, I do not expect. I think you'll have some volatility. It's a commodity, so it does fluctuate. I mean, I think it hit $5 or close to, and then dropped back into the threes. Now it's in the low fours. But if you look at long-term consensus, its long-term consensus is 4. So I don't see it dropping below 380, 370. It could go that low, but one of the other questions here is, do you see any political issues that could disrupt the copper supply chain? And the only thing I could think of, and that's a fairly broad question, what geopolitical event would do that? China's invasion into Taiwan would cause a huge problem for copper, because there'd be sanctions against China. They have the largest smelting capacity in the world. Most of the concentrate in the world ships over to there and gets produced there and then shipped back out as products, as end products. They've got they've got fairly high fluctuating TC and RC charges, which affects their businesses as well. But boy, if they can't get concentrate because of embargoes and sanctions, man, the world, I don't know where copper would go, but it'd be off the chart. Gordon, throughout the presentation, I have heard the highlights. I've heard the highlights on Zonia. I wanted to ask you, what gets you most excited about this project? Well, I think I was pretty obvious for me. I spent a lot of time talking about the metal that's on the leach pads. Now, if it's gone and it got legs and jumped up and ran off the leach pads and ran back into the pit, then I'm wrong, and I won't be as excited. But I mean, what I'm excited about, what makes me most excited, is the opportunity to get more copper quickly into the marketplace, but to have that kind of potential cash flow at my disposal in year 3, within 28 months, or let's say 28 months. I got to give myself some months to get, if it's there, I'll verify it this year. We'd have the portable SX.Ws down there for the end of permitting approvals, and then I would start right away. And as I said, you could process at 7 million tons in a year, and you'd have $100 to $200 million. That excites me. It excites me because it puts us on a completely different playing field than the rest of our peers and competitors. Somebody else is asking drilling date. Arizona has been drilled before. If so, Zonia has been drilled before. If so, any good results? Yeah, the results for Zonia and drilling are good. I mean, the only thing you have to be careful about in the drilling of Zonia is when we move into the BLM lands, because it's been drilled off in private lands, is that at 0.3% copper, you really need to make sure that you don't have a lot of overburden to move, because the pre-stripping and stripping can really affect your economics. So the drilling will tell us whether we've got how much overburden we have, how close to the surface it is, how much material we have to use. So that answers that question. Somebody asked, is there a rollback being considered? The answer to that is the board has talked about it and has not come to a conclusion. Will you be attending Beaver Creek? No, I will not be attending Beaver Creek. I couldn't get accommodation. It's just too crazy there. I'm invited, but I'm not going. I've also, to be honest, I'm going to be on the phone. It would be a good place to go to meet new investors, but I don't have a place to stay. Are you considering a partnership with an Arizona-based company? We have people knocking on our door constantly because of this asset. So if it made sense for us to partner with somebody or to do some kind of a JV, and they had something to bring to the table, if it's beneficial for shareholders on a value basis, we have to consider it for you. Okay, I don't see any more questions. So one question here is, what exactly does fly up mean? That was from Mark Richmond. I think, Mark, fly up means a big rise in prices. He meant a fly up, an acute rise in prices is what he's talking about when we look at the supply and demand curve for copper. And that's all. Okay, somebody asked, when will you know that the metal is on the leach pads? We're planning an 1,100 meter program that will start in October. And then because it's not a regular drill program, I'm not drilling in sequence. What I'm trying to do is to find metal on the pads. I've got to auger down, pull that up, send it to the lab, and then I have to get the results, because if it says this isn't the place where the metal was dumped, I've got to find it. So it's going to take probably 2 to 3 months for this. It's a small drill program and it's inexpensive. It's $500,000, but it's going to take some time. But we should know by the end of the year whether the metal is there. Okay, I thank you very much for attending. Again, the value of World Copper is not anywhere near where it should be, given the asset and given the team. We are going to get on the phones, talk to people like this, get out and show you the value difference and get people into the marketplace. Thank you for your time, and God bless.